Okay, well, welcome everybody. And I know that I'm going to screen share, just bear with me while I get there. I know that the presentation name is the evolution of the financial industry, but I am going to tell you there's so much involved in that topic, excuse me, that I realized I can't touch on it all. So I'm going to give you a tiny tidbit of a few things and then expand on one thing a little bit. And maybe you can say I'm cheating because I actually did an ESG presentation last week. So that's what I'm going to expand on today. And I'll explain to you what that is. So anyways, many of you know, I think almost everybody on this call I've met, and you know I've been in the financial services industry for probably longer than I should admit, but I've done almost everything in it. I mean, maybe not everything, but I worked for a bank. I worked for one of the big brokerage firms at the bank. I worked for a financial education institution where we actually helped to provide newsletters and education courses for public. That was a long time ago, and worked with some really big names in the industry who were the contributing editors at that program. So my background is pretty diverse, and it really taught me, what do I love and want to learn and share with people. And that's kind of how I became a financial advisor. In fact, I was really backwards because I actually got all my CFP and a whole bunch of stuff before I even started in the industry, when I was doing other things, sort of between industries. But it gave me a different lens to look at. And so when I came into the industry, and actually after doing all this courses and having dabbled in it before, what I found was there's just so much change constantly that it really makes it, I guess it makes it interesting and fascinating, but certainly big discussion points. And the second thing is that it affects everybody. Like, we all need to assess our financial future, right? Whether you were lucky enough to work in a job where you have a pension that, maybe it's not quite as important, but it's still important because every day we have to deal with the money we make, the money we spend, the money we're taxed. And how does that move forward? So it applies to everybody and at every different stage of life. So that is something that I have continued to work through. So in terms of when I think of the evolution of the industry or the financial services side, a few things that I think have been most prominent of late are, one, increased regulation. And I can tell you from the day I started in this role, which was now about 22 years ago, the increased regulation has been just unbelievable. What I have to do now, as compared to what I had to do at the beginning, is probably 5 times the amount. And I'm not talking, and at the beginning, there was still a lot. So we are the most regulated industry in all of Canada. And in Canada, we're probably the most regulated financial industry in pretty much all the world. So regulation is good if it protects the end user. What I have issues with is a lot of our regulations at the beginning were good. It's just somebody found a loophole. So they just keep adding levels on levels, and you end up with increasing the cost. But if it was just enforced at the beginning, we probably didn't need the 18 levels they've added on. That's a bottle of wine conversation. We won't get into that today, but the point is, it's supposed to protect the end user, but and sometimes it really does, but we have to make sure nothing ever replaces the fact that you guys still have to be smart about your choices. Next, I want to get into like robo advisory services. Like, that is everywhere, right? I mean, I don't know who watched the Super Bowl, but oh my God, the Questrade, the TD, Easy App commercials, whatever, all of these things are in our face every single day. And is that really the solution? So I think it's interesting because it's great. They have great services, but what is it we actually need? We also end up with many more targeted approaches, right? Like, you look at what happens, and ESG, which I'm going to touch on today in a little more detail, is one of those examples where you can, there's so many different choices. You can have customized portfolios, you can have ETFs, you can have mutual funds, you can have portfolio pension-like structures, you can have annuities. You think of the choice that we have now compared to years ago. I can tell you, my roster, I can assess, I think it's close to 30,000 product. And I don't even think that's opening it up to, that's not opening up to all the stocks in the world, but that's just the base product, which is unbelievable. So that's something that I think is really interesting. And, it's great to have more choice, but you guys think of anything, any industry you know really well, maybe you have more choice, and that's great, but did it actually help somebody get closer to the destination they need, or did it just make it more confusing? So more choice is good, but it also makes it hard to funnel through what that choice is. The last thing that I'm noticing is a huge trend of late is that you get advice from anywhere. In fact, there was a few articles in the Globe, the Star recently, on how there's all these famous people on, not famous, but people who are becoming very well known on TikTok because they're giving financial advice. And maybe if you're scrolling through Facebook and you keep getting all those little things, well, those are reels on Facebook that often come from TikTok. So it's just like, wait a minute. And I don't know about you, but if I'm tired or anything, all of a sudden I'm staring at these going, oh my God, I can't believe how much time this could waste. But the point is, there's all these people talking and telling you about everything, but do they have any accreditation? Can you actually trust them? Like, maybe they're great, but it comes back to there's licensing for a reason. And so they can give you great tips, but you just need to make sure you really screen what you're taking in. And you guys on this call are all pretty well seasoned and well versed in many of these areas. You might not be financial experts, but you've been around for a few years and have heard a lot of different things. So I think it's really interesting to, when you start to hear what other people are thinking. The trading that is going on, and people think of the stock market back more as a trading vehicle. And like, I don't know if you guys heard about the Reddit stuff and things that went on last year that chased some of these stocks up crazy. And they said, oh, they shouldn't be able to short, they shouldn't be able to do these things. I'm like, wait a minute, there's certain strategies that you guys are doing as, well, they're not professionals, but they were trading as a livelihood. So even though they didn't have professional licensing, and if the professional licensor did that, they would have been like, they would have lost their license and been banned. So how come it's okay for them to do it, right? So I felt like, okay, here we are with a double standard, but that's another bottle of wine conversation, because you could say that in just about every industry as well. So there's so much to talk about. We're not going to talk about it all today. So what we're going to do is I'm going to touch base on ESG, and bear with me, I've just got to, and what it means. So I guess the first thing is, ESG is environmental, social, and governance investing. And I can't see you guys all. I can see some of you, but not all of you. But I'm wondering, many people have heard the term, but they don't really know what it is. So SRI, or socially responsible investing, was the term, say, going back for the last 10 to 20 years, and it's sort of evolved, just like everything in the business. So what does it mean? Well, in fact, when we look at this, we can see the environment, and which is obviously top of the headlines. It is important. Climate change, carbon emissions, air, water pollution, energy efficiency, all of these things. Social just means, how are they treating their employees, their labor standards, their engagement, their customer satisfaction. I mean, I had a situation where, I'm not really an online purchaser, but my daughter saw something she loved, wanted me to buy it, didn't know where it was from. I checked out the place. And since I don't really order online, I thought, well, I don't really want to buy from this place. I have no idea. Did a little homework on the name and found out it was, even though they are a clothing company, it's all coming from, and it might not have been China, but it's one country with no regulations, and the complaints was massive. No money back, no replacement. So we just did not buy that product, right? Go to something, but you look at all of that. Then we look at governance. Like, how are they managing? Are they following the rules? Are they, if they're an environmental type company, like we think of oil sands as bad, but the reality is some of those companies, they're doing what they were doing years ago, but they're actually putting in force and following the regulatory guidelines really carefully, because part of what is funding is the changes that they need to make so that they can be a sustainable company in 10 years. I'm not saying I support it all. I'm just saying there are so many ways that we can look at that, and that governance and how it works. And are they doing anything totally, are they doing everything above board, or is there other things going on, below the surface that you want to be careful about? So when we think of ESG, it's covering all of this stuff. And one of the things that I think is important and is evolving is that as an investor, as somebody who needs to save, as somebody who needs to build and have what they need, are you allowed to bring in, I mean, in our life, we bring in our values, right? Marge, you talked about special dietary items that you are preferring now. And that is something that is part of your values, right? And everybody has that. So why can't our investing incorporate that? And does it actually have to cost us money? And the reality is, in most cases, it doesn't. Now, because the sustainability factor is there, what we're finding is the ESG type investing can actually help your investments, and it's one, sustainable, and it still has potential for solid returns. Now, when we look at ESG investing, there's a few different screenings, and it gets confusing because there's so many different levels that we could get into. And I want to just say exclusionary screening is the first level. And really what we're doing is trying to avoid things that are doing companies that are doing something wrong. I mean, that's pretty simple, but that's really what it comes down to. So maybe we don't buy anything that has alcohol or arms, or maybe they don't buy fossil fuels, or they only buy the companies that actually also have renewable energy and are converting to that way. So when we look at that, there's different screening that they have. The next level is what we call ESG integration. So what they're doing is they're incorporating environmental, social, and governance into their investment process. And they're also looking at the risk versus return. So, and then the latter part, which has been a lot of new product brought out in this area of late, is what we call impact investing. And it's something where we actually want to be able to measure our impact. So when that happens, that really is something about the company is actually delivering a new product that is helping to improve the environment, helping to improve our healthcare system and its impact on garbage. So we look at that, and that's actually, we've created and we've just reduced waste by 50% from every hospital. Wouldn't that be nice? But something like that would be their target, and that's why the company is there. So if you're investing just by the screening process, well, you know what? You could just be buying all the banks, because most of them are digital now, or so much digital. They don't have a lot of damage or a big carbon footprint necessarily. So therefore, but are they actually doing something to impact ESG and improve our environment? And in that case, they wouldn't meet the criteria of impact investing, unless maybe they were only loaning to companies that met certain high ESG standards. And so you can see the levels of this get quite substantial. So I think the one thing to consider is what impact do you want to have? You know, how important is this to you in terms of your values? And the one thing I'll comment is, I think it's fascinating. When I started doing homework on this, and there's now a few designations around ESG. In fact, I haven't done it because I keep doing so many courses, but my junior advisor, Andrek, who some of you have met, he's been with me 8 years, he actually got his ESG certificate recently. So he is, very well versed in this whole section. But what's interesting is, I want to just tell you that they have what they call a signatory of the UN, and any portfolio manager who is managing assets can become a signatory of the UN, and it has certain standards. And that is really the leading part of ESG. So in Canada, I don't remember the stat, and it's not easy to find, but I believe we're talking about 70 to 78%, it's somewhere in there, of all portfolio managers in Canada actually have their signatory of the UN, which is amazing. We are actually way ahead of most countries, even though we think of ourselves as a, fuel-based, because that's our core. Many of the managers are recognizing how important it is to start to look at this as a bigger picture. We know we have to improve and make a difference. So we're actually leading in that area. So I thought that was kind of fascinating that we had one of the highest percentages of portfolio managers that are engaged in that. They might not be fully ESG screened, but that is actually happening behind the scenes with many of the holdings that don't actually have credit for it. So it's kind of I thought that was a bit of a good news story. The piece is, then we look at increasing prominence of ESG risks. And I think that is really important to consider. when we look at climate action, extreme weather, biodiversity, all of these things, what was first and different areas. So you can see most of it, some of it has to do with economics, but most of it of late is environmental. So that is really, I guess, the key thing. And so now much of the impact investing is showing that we can do that. Sorry, I'm trying to get there. I thought this was a funny slide, maybe not funny, but well put, that we've been so effective chasing climate change or chasing COVID that we're forgetting that in the next ring is climate change. And it's a way bigger adversary that we all have to work together on. So, and my daughter, frankly, having young people around, and I'm sure many of you do, kept saying, you know, hey, we got to be practical. We got to be the economy. We got to look at this. She said, Mom, there is no economy if we don't deal with the world. And I was like, you know, so funny. She's lovely and she's wonderful, but she never thinks she's smart. And I said, you know what? That's probably the smartest comment I've heard from all of these people who think they're smart and keep telling us what to do. So anyways, that just hit me. So when we look at the different types of investing, there's a lot of it around. You have to determine what your priorities are and your values. And there's a lot. I'm showing a few options here. I will mention NEI and Desjardins are two of the leaders in Canada who have been in it for longer, but it is now becoming much broader. So I think it's quite interesting. I did a presentation last week. If anybody was interested, it's actually not too long. I think he's an ESG expert, so he knows way more than me, but it's about 20 to 25 minutes and it's going to be on my website. If it's not on there already, we'll be there within the next few days. So if you want to know a little more, just go to my website and click on the link and we can happy to send that out later. So the one thing I'll mention is greenwashing. And really this is branding or marketing product that it's green, but is it really? I don't think this is a huge issue, but because it's trendy, people are tending to do it. So I think you just need to have an awareness of what you want, what your priorities are, and how you want this, if you want this to be a part of your investment portfolio. And you know what? I think it's great to have values in investing. It's something I've incorporated for years, but you know, this isn't trendy. This is here to stay. And it may be, we might not even have the term ESG because it might be applicable to everything eventually. So we'll see. But really, there are many ways you can invest in ESG. It doesn't mean you're sacrificing your returns. That has been proven again and again. It is definitely here to stay. And I think you need to know what your focus is, what's important to you. But I want to take this to the next step. And I think I'm close to 20 minutes at this point, but I'm just going to close with a couple more comments. One of the things, and I look at the broader industry and all the things that have taken away. If you are looking at your own priorities, everything seems to be going to robo and this and that. And, you know, everything's cheaper and low fees and this. I want to think about, you guys remember when the fast food industry took off? It's cheaper, you can get what you need, you just keep make on. And in 20 years, you spent less money, right? But that doesn't mean you're healthy or you actually got to where you want to go. And that's the problem, is there have been a million studies, and the stuff that's easy to assess and review are looking at ETFs or looking at whatever it is that's cheaper. I know I'm an advisor, so maybe I'm biased, but the point is, I actually realized the biggest mistakes we make aren't usually because we saved a half a point in fees. They're because we actually made really bad decisions. And the challenge is you need to really figure out what you need and what you know and where that fits. So the ETFs or the robo-advisors are great, but the biggest thing I've come across of late, and one of the structures they're looking at, is that people are doing them, but they're realizing they actually still need the human touch. They need a few points, they need a few other things, and it's just not working. And so when we look at it, we have to figure out, again, maybe you need something in between. You know, some people need full service, some people need simplicity. Look at what your priorities are, what your strengths are. Some people are amazing do-it-yourselfers and they keep them on track. Other people are great investors, but they actually have no discipline when it comes to the planning and the steps. And so I think you need to assess your priorities and figure out where you want to be. Just like picking what type of investments is it ESG, what type of product, what type of service level, all of that, and figuring out where you are and having somebody whose strengths are going to actually highlight what you need. So from that, I'm mentioning I actually have done a lot of evolution myself in the past few years. Yeah, there's some with disclaimers I have to show, right? But I'm just mentioning, I'm a full service advisor. Most of you know, I have clients. Most of my clients, or a lot of them, are business owners, and they're very complex. But the thing is, what we found is I'm a huge believer in education. I mean, that's part of what Marge knows about me, and community involvement and getting business engaged. So I've done tons of presenting. I've presented at conferences and all sorts of stuff right across Canada. And we've actually finally started up our own little financial education and tips website. And really, it's a platform just to put education out there called waverleywealth.ca. So we're just launching it. It's really geared. And then there's a hybrid service we offer now, which is basically a robo advice with touch points with an advisor. So lower costs, but still getting that little extra. So I'm just saying how things have evolved. My example is just one little piece, but I think there's so much out there. And I just think, just like everything, too much choice gets confusing. But figuring out exactly what you need, or having somebody that can help you, is make sure you're going to get where you have to be, right? I tease my clients. They say, I'm not going to live till 95. I said, I don't care. If you live till 95, we're going to make sure that you can get there. And that's our job. So anyways, thanks for all your time. And I will stop sharing. And if we have time, I'm happy to answer any questions.